Right, are we ready? I am ready for sure. Hey, let's start today with that trade that we put on yesterday. Now, based on what I'm looking at, it's looking pretty darn good. And it's actually about to close. Anyone seeing that? So those of you who put on that trade, what's that premium looking like right now? That's right, about 15 cents. Normally, when I put on a trade like this, that we catch it like right at the bottom, which we did. I mean, and it's really, you know, it's not because I'm magical. I mean, we got lucky. All right, and you know, there are ways to find a bottom, and then we're going to talk about that today. But actually, you know, the market does what the market does, and you just have to react to it. All right. So today, I'll actually show you how you can gain additional premium on that trade that we put on just by rolling it up, and we can do that within the same expiration date or push it out as well. So, but yeah. You know, it's only maybe less than 10% of my trades come out that way, just to let you know. But that's why this trade is really good, you know, because you don't have to be 100% right all the time. All right, let's get into it then. Okay, so first thing is we're going to talk about the agenda from yesterday, and I said we would ask you for any questions that you had about yesterday's session, anything that you want to talk about so that we can go over it and make sure that everything's clear for today, okay? Because we're going to add on to what we learned yesterday today, okay? And it's going to get a little more technical today. Took it off at 15. Awesome, Mike. Very good. Yeah, that's a good way to play it. Take that profit when you got it. Okay, why 7 days? That's a good question. Why 7 days? And actually, I have traded 7DTE anywhere from 4 days to not 10 days, actually, depending on, you know, the time and all that stuff. But yeah, I mean, I have really thought about doing 5 day because that's really where the heat of that expiration takes place, or that theta decay takes place. But yeah, 2 days. 2 days is a little close because you don't have a lot of time and distance from the market to make decisions. But in my own experience, I've actually been able to roll trades that are 1 or 2 days without a problem. And actually, we'll probably be rolling one today. In my live account, we'll be probably rolling. Just looking at where the SPX is now. We'll probably be rolling that trade because it's basically 1 DTE, and we'll need to do that today. Okay. Target premium. So target premium to get. You're saying when we put on a trade, what's the target premium? Is that your question, John? Yeah. So target premium is anywhere between 60 to 80 cents. All right. You know, I like to get in, you know, around 65 to 75 in that range, but anywhere from 60 to 80 cents is perfect. Okay, and really, yesterday we got in close to 80 because the volatility was really was pretty high up there. Okay, and we got in at the height of volatility, and you can tell, you know, what happened, right? The money, the market went down. The market went up after that, and the premium just withered away. And that's exactly what you want to get. So yesterday is a perfect example of when to trade, right? when there's blood in the streets, okay. And I'm not talking about like major correction, you know, like 5% down in 1 day type of thing. I'm talking about normal corrections that we've had, which are basically 5, 6, 7%. You know, of most corrections that we've had this year are like that, and most of the corrections that we have are going to be like that. There are going to be some 10% and some 20, but they're seldom coming in. Please explain the difference from rolling or just taking a smaller profit earlier. I like to maximize the gains on these trades since they're really high probability, and so I take it off at 10 cents because usually on a 7 DTE trade, in good market conditions, the trade will be taken off in about 3 to 4 days within that 7-day period, depending on the market, the market direction at that time. But yeah, you can take smaller profits and then add more. I've just found that leaving it on 10 cents is a good medium for me, because I put on trades right every expiration, and by the time, usually in a bullish market, which we normally have in a bullish market, the trade will be taken off at 10 cents after about 3 days, and that's the time when the other trades that I have start going off. So once I have 3 trades on, the first one, once I have the third one on, the first one is almost ready to be taken off, and I usually take it off at 10 cents or 15 cents. Okay, so hopefully that answered your question. Okay, can you please explain how to roll? Today we're going to talk about rolling. Oh, roll of the loser. Yes, we're going to talk about rolling the loser. All right, a position that's already been breached. We'll talk about that. If you get close to the target quickly within a day or so, do you close the trade early? Yes, I've actually closed the trade within the first day that I put it on. You got to be cognizant of PDT, right? Because that's actually a day trade. But I put on a trade in the morning, and I've taken it off in the afternoon, and it's usually around 30 cents that I'll take it off, just because, hey, you make that profit in 1 day, man, take it, and then move on. If you close your target quickly within a day, okay, yep. Would you review the formula for risk? Yes, I will talk about that today, and I will add a slide before I send it out today to make sure that you guys have that. All right. Rolling is closing one trade, and we're going to talk about that. Rolling is closing one trade for usually a loss and adding a trade, opening a new trade, and that's exactly what a roll is. Okay, people who use what's that brokerage? International brokers. Is it international brokers? They don't have rolls. Question about futures. How did you do today and futures? I am long right now in futures and making a lot of money. What can I say? So I'm in futures. I was in yesterday, and I'm riding them up. So I'm a swing trader on futures, just because I just don't do really short-term trades on that. I have a lot of trades, and that's probably the reason. Okay, how can you set trade up in toss, close it, and get the 10 cents area? How can you set the trade up in toss to close? Oh, okay. Yeah, so as soon as I put on the trade, I actually do an opposite order. I do an opposite order and set it for 10 cents to close. And that's what I do. Interactive brokers. Thank you, John. All right. Let's see here. You mentioned 10 contracts, total 222. Then the rest. Yeah, I trade. I'm now trading 10 contracts for 7DTE, so that means I put on 10, 10, and 10, right? So I can have 30 contracts in play, which I do right now for 7DTE. ES is the futures symbol for S&P 500. MQ is the symbol for the NASDAQ. Theoretical value, okay, that's in toss. That's when we're putting on the trades. I haven't used that, but we can look at that today. Let's see here. I trade short-term SPY calls and puts during the intraday, and still scared of SPX. Yeah, 0DTE, you have to have an iron grip and nerves of steel if you want to trade that. Bracket trades, yeah, you can use bracket trades. I don't use them, but you can use bracket trades if you want to. Are you trading ES? No, I trade MES and MNQ. I trade the micros because they give me a lot of flexibility, because I can add positions and cost down, and then I end up with a big position when the market turns around and goes up. So I do a lot of that kind of trading, and the micros allow me to do that. Now, when I have $1 million in my trading account, I'll probably do that with ES, but I'm not ready for that yet. So you create a closing order? Yes, I create a closing order immediately. Yeah, good to cancel order. All right, perfect. Oh, you roll in. Okay, people have told me that interactive brokers, you can't roll trades. Wow, that's good to know. Cool. Okay. Oh, what's on my screen behind me? Let me see. A picture, a plant, a light. Sometimes it goes on. Anything else you want to know? Here, I'll show you. Cool, right? Now I turn it on. Now turn it off. All right. Oh, on the monitor? Oh, my monitor. Oh, those are my wheel trades that I like to look at. So when I see that dip, I put on a wheel trade. I haven't put on a lot of those lately, but those are my watch list for wheel trades. All right. Okay. So let's get going here. So we covered everything, and the only thing that we didn't cover, and let me get my thing here. The only thing that we didn't cover is ideal and not so ideal conditions, and we're going to talk about that today. Okay. And what I said yesterday is that we actually entered an ideal trade. So it's a perfect scenario for you guys to understand what an ideal trade is yesterday. Volatility was very high. We were close to a bottom. We didn't know, but the distance was almost 200 points away from our short strike that we put on. And it takes a lot for the market to go down 200 points, especially in 1 week. So I can tell you that is the ideal trade that we did yesterday. And right now this thing is going to probably close at 10 cents. It's still 15, but I'll probably close that trade today. Okay. Or we can actually look at how to increase premium on that trade as well. Just another way to roll the trade, right? So that covers it then. So that is, let me see here. That covers the agenda for yesterday. Now today we did a review. Now we already did the review of Q&A and when not to place a trade, and we'll talk about that. We're going to talk a little bit about technical analysis and common chart patterns, and we're going to go through that now. And then we're going to talk about rolling a threatened trade before it breaches and rolling a threatened trade after it's breached, and what to do there. Okay, so we'll talk a lot about all of that. Okay, so let's move on. And then day 3, we know about day 3. We'll talk about that tomorrow. Okay, so let's start with some chart patterns, and one way that I do to find a bottom in a trade that I'm working. Okay, you can use this for really anything, for any stock, futures, and this one is particularly a futures trade, and so let's go through it. Okay, so what you see here, this high bar here, it's actually a cost point and another cost point here. This is the low and high of the first hour of standard day trading, right? Not futures, but the high and low of the trade day within the first hour of trading. Okay, and it's called initial balance. So these are initial balance levels for traders, and a lot of futures traders use this, right? I like to pin it to see, because usually it's part of using support and resistance, and these IBL lines, because a lot of traders use them, actually create support and resistance within these boundaries. So it's the first hour of trading, your high and low areas of the market. Okay, and I said it here because in this particular example, it shows us where the market actually stopped going. And so let's go through this, right? So how do we find, how do we actually identify a bottom in the market? Well, what happens is the market, when it's trending down, right? In this case, we're trending down now. You can see this, right? But you don't know what's happening here, right? You don't know what's going to happen here if you don't see the chart right now. So you have to wait, right? Well, is this the bottom? Is this the bottom? No, until the bottom is tested, okay? And when a market is trying to make a bottom, it usually keeps going down and keeps going down, keeps going down until it finally finds an area where there's enough buyers, right, to allow it to stop going down, right? Until that point, you just have sellers and sellers and sellers selling it until it fails. Okay, so right here, it's an actual test, and then it failed. Now we have another bottom because it went down. Okay, and this chart here is actually a 5-minute chart, I believe. I think it's a 5-minute chart. But in any case, either way, it doesn't matter what time frame you have. This is really how you find a bottom. So now it failed. Now we have another bottom. So we have to wait. So you don't want to go in and say, "Oh, look at it going up," right? You want to wait until the market tests again. And here it tested. It broke through the previous low and it failed again, right? Because it broke through the previous low. Now we're going to go and hit another bottom. We hit another bottom because you see here it stops, it moves up, and then boom, what happened? Again, it tested and it failed. Now what happened is that it hit actually at 10:30, right? It hit the IB level here for the low, and it started moving up. And one way that you can tell that the market is starting to recover is that it created basically a higher low here, right? Because it passed this area right here. Before then, you would see lower lows, lower lows, lower lows all over, right? Until finally it broke here. But you still don't have test. So you want to let the market test before you actually put on that position, right? So now we have a bottom. It hasn't failed yet, okay? And there is the reversal, okay? So it didn't hit, it went down to the bottom, and sometimes it'll even pass the bottom and move right up. And that could be a reversal as well. And that's an early entry because it did break the bottom, but a lot of times it'll just spike through and then come back up and then continue going, right? Okay, so now let's see here. I want to show you what's called divergence, okay? So here the market is trending down clearly, right? You can even write that, that tail right here, this trend line here, going down, all right? But at the bottom here, you can see here that there is a low here, right? But a higher low here, even though it went past this area. So this is called divergence, right? This is called divergence. And it's just another sign of picking up where that low is going to be, okay? And so this gives you an additional confirmation. It's not set in stone. That's why you always use stops, right? But it gives you an additional conversation that the low may be in, right? And so here's the same chart with the longer time frame. So the chart I was using earlier is the 1-minute chart, and this is the 5-minute chart. So this is exactly the same chart. This is the same IB levels, right? And you can see here where the market stopped and it actually didn't take out the bottom, and that's where you would get into the trade. So you get into the trade here, right at this green candle, right? And you put your stop just below this this candle here. Now, what a lot of traders will do is they'll actually put buys in at the bottom. They'll put the buys in when the market cracks through, so they get the lowest low, and it's just an early entry for them. If they don't, they'll put their stop a little bit lower and get out. Okay, but a lot of times they'll catch those people that are taking stops, right? And they'll actually buy their positions. Right. So let's look at what happened here. So the market went. You caught a low there, right? And after that, you had higher lows. Okay, you had higher lows here, and on top, what you have is higher highs. Okay, so now that confirms clearly a reversal, right? So this is an example of that, but you can see here after that time what happened. We got a lower high, and so when you get that lower high, that's the time to get out. And you can see then now we had another reversal the other way, and it went down. Okay, I do this with the daily, and I'm going to show you here in a second. I do this with the daily and the hourly. That's how I trade. I don't trade. I don't trade futures 5-minute, 1-minute. I trade using the daily and the hourly. Okay. So and let me give you let me give you an example here. So let's take the SPX, okay? And I highlighted. I made the text larger, okay? And it's I usually use a small text, and it's like these things are like really big. All right. And so what I have here is a fib within a fib. All right. And now I'm gonna show you these fib lines here. So let's take this off. I'm going to take this one off because I'm going to show you what I look for. Okay. Now this is a retracement. Okay. So this particular, I always have my retracements up on my longer dated, longer dated positions. And you can see here where the fib yesterday broke through, went down to this, I think it's a 100 EMA or SMA, and then reversed. Beautiful reversal yesterday, by the way. And that's where we were yesterday. We were around this area down here when we put on this trade, okay? I didn't know it was going to reverse, but the probability is that it wasn't going to go down 200 points or even 150, I don't think in that time period. And if it does, you have plenty of time to adjust that trade, okay? Okay. So let me put my face on here now. Okay, perfect. All right. So now these are fibs, retracement fibs pattern here. So there's the market. All right. Now you can see here where these fibs create or actually just support and resistance areas, okay, that happen within the market. These are big big long positions, and there's a lot of room here, right? And so when I want to find out, what a what percentage move down is. So now what I do is if I want to see where what percentage, right, this market went down, so I'll put my trend line here. I'll go down to here and look at that, 4.91% from top to bottom. That's a 5% correction, right? So we can do the same thing again. We can go here, do the same thing here. What do you think is going to be? 5.24%, a 5% correction. So this is what happens in the market all day long. So if you plan for these corrections, you'll know what to do, all right? And since I'm in here all the time, I gain experience from understanding the market moves. And so I'm a little more patient, to adjust the trade, knowing that, the market will eventually come back just as long as we have good conditions going on, okay? Okay, so now I'm going to show you, so this is the retracement fib, okay? Longer dated retracement fib. And I just want to give you guys, the big picture, because it's really important to understand overall market sentiment, where it's going and what it's doing. So where I drew my fib was from this point here, which is about 6 months back, okay? And then I keep moving it higher, okay? So it's going to be time for me to move it, because 6 months is a pretty long time. So I'll just take this, okay, and I'll move it here, another low point in the market, okay? And you can see here still, support and resistance areas still appear. Amazing, right? See the congestion area? So in here, even this candle down, the stem here went down to this area down here, 55.94. So that's how I use the retracement. Now I'm gonna share with you an extension tool, right? So this is an extent. What I'm gonna put on now is a Fibonacci extension tool, and this is used a lot in futures. So you can see here, guys, right? The market went up a certain distance, goes down, didn't take out the low, right? And then the probability is going to be that this market will go up as much as this went up, all right? These are patterns that happen over and over and over again. So that pattern is going to take us to the 100% level. So now I'm going to use these two levels here to put on my Fibonacci extension. And I have to grab it from another chart. Okay, so now I'm putting on a Fibonacci extension. So I'm going to go from the bottom here. This is your A, B, C area. All right. And so if you're in this trade right now, this is the low. This is where you would get out at the low here. Okay. But the extension tells us that it's going to finish here. So when I set my futures target, I set my futures target to here, 100. And sometimes it goes beyond and extends to the 125. So I'm thinking here that we're going to go up to 48.69. That's what the pattern tells us. And if you look at the market over and over again, that's what happens over and over again. Okay, so it gives you confidence in your trading to know where to put on these targets. You know, and you don't have to take the full target. You know, but I'm pretty sure this guy is going to take out the high. You know, before, I don't know, could be this month, it could be next month, but we're in a period of time where the Fed is starting to change policy and start to raise interest rates. And if you look at history, okay, during a interest rate rise cycle, the market moves up almost all the time. All right? Okay. All right. So let's move on here. Any questions other than I don't know what parabolic stop and reverse is, but I can surely look that up. I guess it's another way to find a bottom. Okay. All right. So let's change. Let me go back to my setting here. All right. Right. So now, okay, let's move on here. All right. So we talked about fibs a little bit. Okay, and this is another example of a fib, and this is in a 5-minute chart. So that fib that we were just using to find the bottom, right, can be used here as a retrace tool, right, to give you levels for where it's going to go. And usually when the market goes up and it breaks the 78.6 area, it usually will take out the high. Okay, before then it'll just retrace again, right, and it'll stay range bound basically, right? Okay, so another example of an extension here, and this is in a 1-hour chart. Okay, so you can see here that I put on A here, B here, and C here, and then my target is going to be at the 100 level of this fib. Very simple to use, just really, really simple. All right, so you see A, B, C, and then D is up to the 100 level up here. Okay, and that's your target. All right, so now any questions about that? And that's really the extent of the tools that I use for managing trades. That's it. Mostly Fibonacci retracement and extensions. I use RSI for divergence and finding a bottom, but that's what I use. Okay. Oh, sorry about the numbers. Yeah, on those slides. Okay. All right. Very cool. So now let's talk about rolling a trade. Some of you have done this before, some of you haven't, and you know, I just want to make sure, at least from today, that you'll have a very, very good understanding of what this means and how to do it. All right, because rolling a trade is probably the most important risk management tool that I have to trade 7DTE monthlies, credit spreads. Okay, sorry about the resolution. So it's a resolution in the example that I shared, or in the chart, in my chart. Okay, hopefully you can see the screen, right? Can you see the screen? Okay, all right. Okay, anyway, let's move on here. So rolling a trade. So what is actually rolling a trade? And we already talked about a little bit. So this is a trade that could be on right now, right? That you want to roll, right? And so what we do here is we actually close this trade out. We're going to close it out in one trade. Okay, we're going to close this trade out by rolling it. And so we're buying to close the 47.30, 47.20 put spread, And at the same time, we're selling to open the 4720, 4700 put spread, right? So, and we're doing it from, this shouldn't be 7. This is going to be that should be a bigger number. So this is, normally it would be like 7 days away. So it would be normally like 14, okay? So that roll would be like 14 January because I want to roll it out 7 days, right? And so the end in the roll that you're actually doing, and again, this is the, I have the wrong number in here. It's supposed to be 14, okay? But you're rolling the trade down from 47.30 on the short strike to 47.10, okay? So you're rolling it down 20 points further. And it's a cost of 25 cents, right? So you're actually paying a debit on that roll. And in the end, this is what it looks like. Only this is 14 here instead of 7, and because you're taking away, because it's a debit, right? And this is the way that I track my rolls. I only have a 10% credit now on that position, okay? And what's important in rolling is actually part of risk management. You're wanting to get that position away from being in the money so that you can manage it and still, even if you come out at a loss or a small loss, that's okay, right? But that's really how you roll that trade. Okay. All right. So now let's look at a real trade that I have to roll. And I'm going to open up screen here again here. Okay, so I position this now, so you can see my positions here, right? All right here. And so I have a trade that expires. I have a trade that expires tomorrow, right? And I'll show you that trade. And it's 12 January 22. So what I'm going to do here is find those strikes. So 4660, 46, no, not that, that's the wrong one. 4670, 4660. Okay. So we're only 20 points away from the money here. Okay. So I'm going to, this says 14. It's actually 12, but I can change that. So I'm going to go to 4670. To be honest, I usually do this on my phone, but I just want to give you guys a view here of how I do it. All right. So I'm putting here 14, but it really should be 12. So I'm going to change the date here. 12. No, not to 10, to 12. The other 12. And that position, 4670, 4660. Yeah, 4670, 4660. So let me change that. I'm going to move this down here. 4660 to 4670. Okay. And then I'm going to roll this out. Let's see here. Let's roll this out the 12th. Let's roll it out to the 18th. We can roll it out to the 18th or 19th. I'm going to roll it out to the 18th. There's trading on me. Yeah, because we have Monday off, it looks like. Okay, so I'm going to change it out. Okay, so if I just kept the same strikes, right? Okay, let me get the questions here. Okay, so can you guys not see the numbers on the screen? Can't see? Okay, hold on. Let's make this bigger. Okay, I'm going to make them bigger. Hang in there. Feel, is it looking feel? Yes. Make it extra large. And now you're going to tell me if you can see it. And if you can't see that, is that any better? No? Man, not much. Okay, guys, I can't get any closer then. That's the largest that I can move it up. Okay. Oh no, this is the option chain. What I'm using right now is the option chain. It's huge on my screen. So this is the area that I'm focusing on. I'm gonna tell you what they are, okay? Okay, so down here is my position, right? Let me see. Yeah, you guys could see my cursor a little bit. Okay, it's a tiny bit better. Sorry, guys. All right, so down here is my position. I have a 12 January 22, 4670, 4660 position. Okay, this is actually my position that I have on right now. Okay, and you can see that we were in the money yesterday. All right, so now what I want to do, and here there's a 75-cent credit if I just keep the same strikes, right? Well, the time frame, I usually push it out 1 week, okay, 1 week out. What I'd like to do. right? But I want to bring this lower. I want to bring this these positions lower. Okay. So what I'm going to do is I'm going to take it. I'm going to just use this to take it down to 20 points lower, which will give me some relief and additional time to manage this trade. All right. I can bring this in. Okay, there we go. So I'm going to make that 50. Actually, it went to 45. No, I want that to 40, actually. I want that to 40. I want that to 40. And I'm going to talk through this, all right? So hang in there with me, okay? And I'm going to make this 46.50. All right. So now, right now, I can roll this trade for a 15-cent debit, and it's 46.50, 46. I'm rolling it from 12 January, from 12 January, and I'm rolling it down 20 points, and it's going to be a debit of 10 cents. All right. And it's probably going to be actually 15 cents in order to see it. Okay. So this is my roll. Okay. So the bottom two numbers here, and I'm sorry you can't see it, right? The bottom two numbers here is 46.70, 46.60, and it's 12 January. This is the trade that I have on right now. Okay. And I'm rolling it down to 46.50, 46.40. So I'm buying to close the 46.70, 46.60 trade for 12 January. And I am buying the 46.50, 19 January position, right? And it's showing me a debit right now of 5 cents. 5 cents, it's 10 to 15 cents. That's basically the debit that it's showing me. Okay, you can see those numbers. Awesome. All right, but I'm telling you what they are too, so hopefully that helps. What triggers the decision to roll? Number one today is 1 DTE. Okay, which means I will be, if I let this go until tomorrow, I have no control of what happens overnight in a 0 DTE scenario. I do not do that. I always have control. Right? I always have control, whether it's through expiration time or position time, but I always have control. And overnight, I have no control, which means I will not let this go to chance. Right? That the market could move down tomorrow, and I'm in a 0 DTE position, and it would be a very, very costly roll for me to make in the thousands of dollars. Right? So I'm going to save this trade. I think it gives me the option to save it here. Don't remember. Yes, save the trade. So I'm going to save this trade, and here it is, right? And here it is. So what I'm going to do now, because I have 300 people probably in this trade too, and I'm going to let them know that I'm rolling this trade. I'm going to move it out. Okay, so be prepared. Because I need to move this trade out. Okay, and actually, the market's probably going to go up, and that's okay. But I have a good chance at a good price to actually roll this trade. Okay, and that's exactly what I'm going to do. So now I'm going to actually publish it, and the debit. It's probably not going to even be a debit. It's probably going to be a credit because I see the market moving up. Okay, and now I'm going to tell my folks right here that I am going to roll this trade. And I have 10 contracts, put 10, rolling trade, okay? And you can see here, the 12 January trade, 46.70, 46.60, and that's trade 296, rolling, so I'm telling them 296. And now I'm gonna look at the price, okay? I'm gonna look at the price one more time because I'm pretty sure it's gonna be a credit on this trade. Let me put in the right, here it is right here. Edit this trade. Okay, let's see where that, okay, so it's 5 cents. 5 cents or 0. Okay, and I'm going to tell them I'm going to do it for 0 because I want to get this trade done and out of the way. Okay, so right now it's fluctuating. So this number right here, if you can't see it, this number is fluctuating between 5 and 10%, 5 and 10 cents. So it's going up. Okay, so now I'm going to tell them I'm going to roll this trade for a limit, negative, of 0 cents. Okay. Now I just alerted them that I'm making that trade. Okay. And what I can do here is I can do it from here. Confirm. I don't want 10 cents. That's 0. Okay. So right here it's telling me it's 0. So I'm actually sending the trade, guys. Okay. Here it goes. What happened in my account? Actually, I didn't put 10 contracts. So now I'm putting 10 contracts. Okay. It says 0 right now. It's fluctuating between 0 and 5 cents. We'll just leave it here for a few minutes here. All right. So while that one's going on, we have a little bit of time here to go on here. All right. So you know what? Since we have really 3 minutes left, let's answer some questions here. Okay. Let's just answer some questions. Let's do some questions here for the day, and then I'll let you know if it fills. Okay. So this particular action that I did is very, very typical of what I do all the time, right? So I'm de-risking. What I'm doing is de-risking the trade, right? Because I'm pushing it out a week, which I don't have to worry about expiration, and I'm rolling it down a little to give us more distance from the market. Okay, and we'll see if it. I don't like letting it sit there, so I might just take a 5 cent debit on it, and that's exactly what I'm going to do. I'm going to lower it to 5 cents and push it through again, and let's see if it takes it. No, because now the market went down a little bit. Okay, all right. So let's look at some things here. Couple things. Okay, the trade confirmed, right? It just went through for a debit of 5 cents. I don't, that's nothing. Okay, and I'm going to let them know that I filled it, negative point, and there it is. See where it showed up? Okay, I don't know if you can see that, but that's basically my trade alert, for these guys. Okay, all right. So let's look at the questions here real quick. When should you roll a threatened trade? And we may have not talked about that, but let's use this as a learning exercise here. Okay. Number one, when the short leg is breached. Now we really don't want to do that. We don't want to wait till the short strike. Yeah. Okay. When the short leg is 10 points away from the market. No. When the short leg is 40 points away from the market. When the short leg is 20 to 50 points away from the market. Yes. That's really the answer. So depending on volatility, right? We use this. We do this to make sure that we get a good price for the roll, okay? And usually 40 to 50 points away, you're going to be able to do it and lower it for a small cost. Not a cost, but very, very little cost, and sometimes a credit, okay? Okay? All right. So now we move that away. I can sleep at night now, knowing that, hey, this trade is going to be out there. I don't have to worry about it being exercised because SPX, it doesn't exercise, or it doesn't it doesn't end till expiration, right? Oh, so I rolled it into. I didn't roll it. Let me make sure here. So I rolled it into an expiration that we already have, which is we have a 19. So I'm going to have to. Well, I'll have to adjust it because this one's 46.60, and I'll roll that one out probably another day. Okay, that's okay. We'll work it out. Overlapping, definitely not overlapping. 50-40, yeah, see what I did. So actually, I may have an overlapping trade now. 19, yeah. So what happened was I rolled one trade into the other, and I created a 20-point spread. And I've done this before. Yeah. Okay. All right, guys. Let's see here. Let's do one more. Close the poll. See if there's another one here. Okay. Well, we're over time. All right, guys. So this is what happened to this trade. I actually rolled it into another one, and what happened was it created a 20-point spread, which I've done before, but it's in one expiration, which is not great. It's not what I like to do, but it'll be okay. It'll be okay because it'll work out. All right. So any questions for today? Any other questions? Yes, it's okay to start with 5 wide, not a problem. My performance is based on 6 contracts. Actually, I started with it was lower than 6 contracts. I think so. It went from 6 contracts through 10 contracts, which was at the very, very end. So I used 6 contracts probably 8 months out of the year, and then started moving up to 7, 8, and now 10. All right. I can roll until the end of time. I've actually done 9. I think my record is 9 rolls before. I did it accidentally with the 20 wide because I rolled one trade into another. Okay. So I did it by accident. Any other questions here? The wider, the further out. Let me see. The wider you can get from the money, but yes, that's correct. So if you want to do it wider, like right now it's a 20-point roll, then there is more capital requirement on that. But actually it's not because now it's 2 trades, and I had 2 trades before, so there's not additional capital that I need. I don't consider rolling. I don't consider delta on rolling. Okay. All right, guys. We're a few minutes over. Let's save your questions for the next round tomorrow. We'll have a lot more to talk about tomorrow, and we'll put on another trade tomorrow. Okay. All right, guys. Thanks for your time. I appreciate it, and have a great rest of the day. All right.